Every time you tap your card or swipe at a store or, just buy something online, there's a really good chance you're using their network. Visa and Mastercard are, well, they're absolutely everywhere. I mean, they're two of the most recognizable brands on the entire planet.
But here's the thing that's kind of wild. They aren't your bank, they don't set your interest rates, and they have literally zero risk if you don't pay your credit card bill. So, what exactly is their business? How are they making billions with a B without taking on any of the usual financial risks? All right, let's break it down.
Okay, so to really get how they make all that money, we first have to tackle this huge misconception about what Visa and Mastercard actually do.
So you might think they're the ones lending you the cash for that big purchase, right? Nope, that's the myth. The reality, the actual card in your wallet, whether it's got a Visa or a Mastercard logo on it, was issued by your bank. Like a Chase or a Bank of America or a Citibank. They're the ones lending you the money and setting your interest rates. Visa and Mastercard, they're actually technology companies. What they do is run this massive, secure, global network that connects all those different banks together.
Yeah, a good way to think about it is like a logistics company, but for money. They don't have these giant vaults of cash lying around. Their entire job is just to move the information about your money from the store to your bank and back again. And they do it securely and in just a few seconds.
The best way to really picture this network is to think of it as a global money highway. So let's do that. Let's trace a single purchase and see exactly how this whole thing works.
All right, so let's say you're buying a pair of shoes for $100. The second you tap your card, the store's little terminal sends a request rocketing over to the Visa or Mastercard network. Instantly, that network routes the request to your bank. Your bank does a quick check. Yep, they've got the funds, or nope, and sends an approval or a decline right back through that same network. The whole round trip, it takes just a couple of seconds. It's incredible.
And really, that's their role in a nutshell. They're the central switchboard. The connector, they're what makes the entire global payment system, well, work. Now, the actual money gets settled between the banks later on, but Visa and Mastercard, they make that instant approved message possible, millions and millions of times every single minute.
Okay, so if they're not lending money, how in the world do they generate those billions in profit? Well, it all comes down to charging tiny little fees for using their highway. Let's break down their 5 main sources of income.
First up, and this is the big one, is transaction fees. Every single time a payment goes across their network, they take a teeny tiny slice. We're talking fractions of a percent. It's literally pennies on the dollar. But when you're processing billions of transactions, those pennies add up fast. This is their single biggest source of revenue, by far.
Number 2, they make even more money on cross-border fees. Ever use your card in another country? Well, that transaction is way more complex, right? It involves currency conversions and all this international processing. So for that extra work, they charge a higher fee, which makes these international transactions incredibly profitable for them.
All right, third, they sell their tech. I mean, think about it. Because they see a mind-boggling number of transactions from all over the world, they have one of the planet's best fraud detection systems. So what do? They package that technology up, along with all sorts of data analytics, and they sell it as a service back to the banks that use their network. Next up, the brand itself is just incredibly valuable. For a bank to even be able to put that trusted Visa or Mastercard logo on their cards, they have to pay an annual licensing fee. And that gives Visa and Mastercard a nice, steady, recurring stream of income just for letting banks use the brand and get access to that global acceptance. And finally, you've got all the extras. They help run loyalty and rewards programs, they offer consulting services, and yeah, they get a little piece of the action when you link your card to a digital wallet like Apple Pay. All these smaller streams, they all add up, and they create this massive competitive moat around their business. So when you put all of this together, you really start to see the sheer genius of their business model. It's basically a duopoly that's designed for maximum profit. We are talking profit margins of over 50%, with almost zero risk. It's just wild.
This quote really just says it all perfectly. They are essentially toll operators on the world's money highway. They don't own the cars, they don't own the cargo inside the cars, they just own the road, and they collect a tiny fee from every single person who uses it.
So what makes this model so powerful? Well, it really boils down to 3 things. First, zero credit risk. If someone doesn't pay their bill, that's the bank's problem, not theirs.
Second, there's no physical inventory. Their product is digital infrastructure, no warehouses, no shipping costs. And third, it is unbelievably scalable. Every new card they add to the network just brings in more revenue with very little extra cost.
And the scale we're talking about here is it's staggering. Visa alone processes over 260 billion transactions a year.
And they do it across more than 210 countries and territories all around the globe.
With over 3 billion cards in circulation, just between the two of them. And that right there creates this powerful network effect, right? The more people who have the cards, the more stores have to accept them, and the more stores that accept them, the more people want the cards. It just locks in their dominance.
But, okay, in a world with crypto and all this new fintech and digital wallets, you might be wondering, is their time almost up? Well, they're not exactly standing still.
See, instead of fighting all these new technologies, they're working to absorb them. They're looking into blockchain for settlements. They're partnering with crypto platforms to bring digital currencies onto their network, and they're building out new real-time payment systems to make sure they stay ahead of the curve.
Ultimately, their strategy isn't to fight the future of money, it's to make sure they own the highways of the future too. It doesn't matter if money moves via a plastic card or your phone or some form of crypto, their goal is to be the network that's moving it.
So the next time you use your card, just remember the simple breakdown of their whole business. They don't lend, they don't borrow, they just take a tiny, tiny fee from a truly mind-boggling number of transactions.
And that leaves us with a really fascinating final question. In today's economy, who really runs the world's money? Is it the big banks that actually hold all the funds, or is it the payment networks, the ones who control the highways? Something to think about.